Hello, it's Adil bringing you a review of the FTSE 100 for the 19th of August 2014. Okay, into market analysis perspective. So first of all, let's go over the fundamentals. Okay, so what's the highlight for the FTSE today? Okay, BHP Billiton obviously being split, and that obviously initially caused some weakness. And the main news of the day was excuse me, inflation data. So as you can see in the daily chart here, we've had this gap higher with regards to Carney's wage inflation talk. Okay, so initially last week he focused on wage inflation, then over the weekend he said the wage inflation wasn't a concern, and surprise, surprise, what happens? Inflation rate is below expected. So the question is, did he have access to information beforehand? Yes, he did. And why did he talk down inflation? And now you know why. Why did he talk down wage inflation? Because he could afford to talk down wage inflation. Okay, so that's the situation. That's the reason for that. I think the reason why I think he wanted to talk down wage inflation was because he knew the inflation numbers were going to be worse than expected. So he didn't want everybody to be ultra bearish, should we say? Okay, so given the fact that everybody was already being bearish, because if he said that it was focusing on wage inflation, and wage inflation is nowhere near where he wants it to be, okay, then obviously that's the situation that we have there. So that was one of the prerequisites as well. So if he was focusing on wage inflation, therefore everybody was dovish, all of a sudden he states that wage inflation isn't a concern, he can raise rates prior to wage inflation, then obviously that buys him some time, and obviously that's the situation that we have here, because he doesn't want everybody being extremely bearish after this inflation data that's come out worse than expected today. I'm hoping you're still still with me there. Either way, okay. From my perspective, I was expecting the 200 MA to hold, given the fact that we've had quite a substantial sell-off. Okay, from the 1.7200 region down to the 16650, 16600 region now. From my perspective, all that bearishness is certainly, I think everything's priced in from here, basically. That's my interpretation anyway so far. So that's basically where we are. Weekly charts certainly are coming into support around this 1.66 region. And the daily chart certainly does remain bearish as of now, given the fact that we've penetrated the lower bound. So now the most important thing is going to be the minutes tomorrow. So if anybody is dissenting, then obviously that doesn't bode well, okay, for the equity market, because obviously if there's a dissension, that means that somebody's opposing the view that interest rates need to be kept stagnant or kept low, and that obviously opens up the door for an interest rate hike, which obviously sends sterling higher. So we are in the lower channel support of this bearish channel. So we'll see exactly what happens. Again, it's open to multiple interpretation, and it's all based on data. So we'll have to focus on the data for now. Okay, so that's basically where we are. We are into some basically all the bearishness now. Certainly we factored into a large extent. Okay, and I think this move was exacerbated given the fact that housing data out of the US came out stronger than expected, and obviously inflation data came out almost in line, although the month-to-month level figure sort of missed target. Okay, so that's basically where we are now. Even with and also the reason why I expected the 200 MA to hold was because going into Jackson Hole, everybody's expecting Miss Yellen to remain dovish, and if she remains dovish, then obviously weaker dollar, therefore sterling higher, etc., causes GBP USD to rise, and obviously that's not been the case with the economic data today. Okay, so basically, how do we interpret this? The way in which we interpret this is by looking at the FTSE chart and asking ourselves, okay, given the fact that we've bounced off this 6530 level all the way up down to 6780, so almost 300 points plus rally, it has all the bearish news been, or bullish news should I say, been factored in? Yes, from my perspective. Okay, because we've exceeded the 75% fib. Okay, so if you look at it here, we've exceeded the 75% fib. Now we're short squeezing. Now the only catalyst now is if this 780 level doesn't hold, then obviously we next level we go to 6830. Now given the fact that the Israel and Gaza ceasefire has obviously basically been negated because Hamas has fired 3 rockets, then that basically means that we have geopolitical concerns and that's obviously been escalated. So not only that, is we also have concerns in Ukraine. The fighting still carries on. There's no change there whatsoever. Just now, as I'm making this video, Ukraine has stopped Russian TV. Kiev orders crackdown on Ukrainian providers broadcasting Russian TV channels. So that's, I mean, if you want any sort of truce, that's not exactly a way in which we go down the path of some sort of ceasefire or truce or reconciliation, where both sides still have enmity for one another. So that doesn't bode well. Also, Kiev guarantees safety for Russian aid convoy only in areas it controls. So again, you know, the aid convoy is really a pretext for war, because the Russians want that to be attacked so that they have a reason to invade, and they're just looking for an excuse. That's basically what it comes down to. So that's basically what we're looking at. Okay, so that's basically why we're understanding it. Okay, so basically we have diagonal trendline resistance. Okay, from that perspective. Now, if you look at the FTSE 250 as well, the FTSE 250 very similar, diagonal trendline resistance, key trendline resistance. And that's basically what we're looking for from with the FTSE being paced. Now, the FTSE 350 is coming up into horizontal resistance. It has broken its bearish trend line or bearish diagonal, but again, it's coming into resistance. So that's basically the interpretation that we have here from a technical perspective, the fact that the market is into resistance. Now, one of the main things that we have to focus on as well is that the S&P 500 is also into resistance as well. If you look at your daily chart, you can see that we are coming up into resistance around this 1980 level. It has taken out the 75% fib miraculously. I mean, one hell of a move, and it's now into the 1980 region, but again, it's coming into resistance. If you look at the Russell 2000 again has filled the gap, the one that I was referring to, held the resistance at 50 MA, and now looking to move south. So keep an eye out for that. Okay. With regards to the Dow Transportation Average, it looks like it's putting in a potential topping tail here. Let's have a look at 10-minute chart. 10-minute chart obviously has closed the gap now, and we are seeing some potential weakness coming through. So basically, keep an eye on the daily chart. Daily chart certainly looks like it's putting in a topping tail for the day, and looking for a potential reversal around the 75% fib. Look at the Dow Industrial Average. Dow Industrial Average is into the 75% fib resistance as we speak, and certainly is still boarding to, well, still certainly strong for now. Let's see how the day goes on, but it's into that key resistance region on the daily chart at 75%. Very unlikely for us to go any higher than that. Again, with regards to the geopolitical phase that I've stated, with regards to obviously Israel Hamas breaking the ceasefire. Not only that, obviously Russia-Ukraine situation still in the background. Plus, we have tapering concerns with regards to stronger US data and inflation data, almost coming in line, although the month-to-month missed the housing data. But having said that, even though the inflation data did come at 0.1 when it was supposed to come at 0.2, the yearly figure came in line. Okay, but one could argue that given the fact that the US market will trade up to a 75% fib and more, then it's certainly been factored in or priced into the market as well. Okay, so bear that in mind. So that's basically where we are with regards to that. Okay, so that's the understanding there. So given the fact that US markets are certainly overstretched and certainly are looking very exhausted, let's have a look at the actual FTSE itself. The FTSE had a last minute 10-minute candle, was very bearish. Okay, so quite a substantial candle there, a very weak candle. Obviously held a double top, did break double top resistance, but then eventually sold off. You've got two unfilled gaps below, so you've got the gap at 6741 and the gap at 6690. So watch out for those two gaps that certainly need filled. Given the fact that tomorrow's data, like I stated, if we get any one of those dissenters come through on the minutes of the BOE, then that obviously opens up the door for interest rate hikes. So keep an eye out for that. Okay, and your resistance levels are 6790 and 6778, two very, very powerful resistance levels. Okay, you also have this resistance down here around the 6770 level, so anywhere in this region, solid resistance, because previous support equals resistance, and I expect this bullish channel to certainly break down to the downside. Okay, that's basically my interpretation of the events, and that's obviously based on the fact that the sterling has certainly sold off, factored in all the bearish news, and now the FTSE is into resistance as well, and US markets are into resistance also. Okay, now having said that as well, looking at your commodities, I mean, if you look at copper, it's down quite hard, gold is down, oil is down, so your commodities are very, very weak, and obviously BHP Billiton was under pressure today. So that's all the arguments for the FTSE to go lower. Okay, especially focus on those two gaps below, 6740 and obviously 6690, and that's obviously dependent on the minutes tomorrow. So if any one of those individuals dissents, then down we go. But having said that, a lot of the sectors are already into bearish territory. So for example, if you look at the banking sector, as you can see here, double top or triple top resistance. We got previous resistance in this region also. Okay, so double top previous resistance with regards to the banking sector. We can look at the other sectors as well whilst we're at it. We can look at the mining sector. Obviously it's been weak all morning, all day should I say. Downward trajectory, looking for a potential next move down to 17,500 due to BHP Billiton predominantly. And as we know, copper, oil, gold all smoke today. So it's not exactly boding well. Obviously they're all representing growth, and that growth is exceptionally weak right now. Obviously the retail sector certainly did well today, obviously on the back of what? On the back of the weaker inflation data and obviously interest rates remaining low. So that certainly did well, and that certainly helped propel the FTSE, but that's all factored in as well. And given the fact that it went above pivot R3, certainly into oversold territory, so keep an eye out for that. We have one more, the pharmaceutical industry. Pharmaceutical industry, certainly remains weak today. Obviously pushed higher, attempted to close the gap, and certainly not made any new highs. So keep an eye out for that as well. Okay, folks. So risk on, risk off, wax on, wax off. Goodbye now.